What's happening, everyone? Geraldo back again on YouTube, and this time I'm going to spill the beans and we're going to take you through the full journey from all the way from baby pips all through No Nonsense Forex all the way to the ICT YouTube channel, and now finally creating my own hybrid strategy, GFX. Let's dive into it. So you want to learn Forex trading. Now everyone wants to learn Forex trading, but I think people don't know where to look for, where to start, right? Now straight off the bat, I'm going to tell you guys, I'm not going to get into the basics of Forex trading or whatever. That's why I'm mentioning babypips.com, which is a great place to start, alright? But I bet you want to be profitable. Learning Forex trading is one thing. Becoming profitable and using that knowledge to become profitable is a different story, right? And maybe you want to join your favorite prop firm, or maybe you just want to make some extra income. Whatever your reasons are wanting to learn Forex trading, you better know what you're doing and who you're going to learn from. Now I'm inviting you guys to this YouTube channel because I'm going to spill the beans, like I said earlier. Alright, a few things you need to understand is that the Forex trading game, trading currencies, is rigged. It's definitely manipulated, and I'm not just rehashing what I've heard. Obviously I've heard from No Nonsense Forex that the market is manipulated by the banks or whatever, but it was such a vague picture about what is really going on. And now I figured it out. I know what's actually going on in the market, and that's why I can say it's manipulated. And the market is not random, obviously. As a lot of people say, you can't say what's going to happen, but the market isn't random. So you think you can just step into this trading world and step out with some bank's cash? No, never. Plus there's a lot of shit going around. Like I said, I'm not rehashing. Some of the things that I will be talking about is what I learned on other channels, but I just didn't take that and am rehashing it. But what I'm doing is I've actually tested these things. I've scrutinized all of these channels or whatever, not all of it, right? I'm trying to figure out what makes sense to me and what logic I can use to become profitable. And that's how I stumbled across my strategy and build up my strategy. So if there just was a channel that could show you, right, what you needed to know about Forex trading the right way, with a sound edge and money management plan that actually works. Mine works, and I'm going to show you on this channel as I take a FGMO challenge as well, showing you that becoming profitable is actually possible, right? So if you want to join me on my journey, it's going to be in your best interest to subscribe now. GFX Trades, right? Okay, so who am I? My name is Geraldo, but you can call me FX7 from now on. I've been trading now for 3 years. I have been profitable for a year and 7 months, maybe more, maybe less. I don't keep count. And I want to share my trading journey as a profitable trader with you, so it may bring you closer to becoming a consistent profitable trader yourself. But first, what style of trader am I, and where did I learn? Now, my journey obviously started on a YouTube video that I came across. I'm not going to name the YouTube video, but it was all lifestyle flexing or whatever, the guy that was doing the video. And after that I just went down the rabbit hole, and I soon learned that everyone's talking about babypips.com, which, like I mentioned earlier, was a perfect starting place, and it still is a perfect starting place if you want to learn the basics about forex trading, knowing what a lot size is, knowing what a micro lot, mini lot, standard lot is, and how the platforms function. Now I've moved over from MT5 to MT4 now, predominantly trading just on MT4. And I've played around a bit with TradingView, but I don't like the feel of TradingView, but I'm able to do it there as well. But anyway, knowing the ins and outs about a platform, knowing what the sidebar of prices means, knowing what a base currency is, what a quote currency is, all of those stuff you're going to find at babypips.com. Now, same as VP, I don't recommend like everything. Not everything on babypips is going to be useful, and this is not a cheap shot at babypips.com, but it's just the reality, right? So go ahead and go and learn those basics, because you need to understand the terminology and the lingo that goes around with forex trading. Alright, so after me learning on babypips.com the basics about forex trading, I came across this channel, and this was my first introduction of trading with a plan and a money management plan. No Nonsense Forex. Always going to be grateful for this channel. So shout out to VP, did a great job laying down the foundations for me. And obviously after that, after building 3 algorithms, then I still wasn't happy, because, and I'll tell you the main reason why, is that I wanted to turn over my money as quick as possible. And waiting a day for a signal, sometimes 2 days, 3 days, or whatever, that wasn't working for me. Not because that the No Nonsense Forex strategy is not working, but that waiting around, I was ready to go every single day. Now obviously, and also, I didn't want to trade all the currency pairs there is. I wanted to trade maybe like 5, 6, something like that, right? So you can imagine me sitting on my hands for quite some time trading just No Nonsense Forex way. And that's why I went off, leaving No Nonsense Forex for a little while to go and see what the marketplace has to offer about price action. And I came across this guy, ICT, Inner Circle Trader, Michael Huddleston. Now this guy provides a lot of value, a lot of things that just goes over people's heads. But I put my head down and I studied real hard, and from the free material. So I refined my price action understanding. Obviously there's way more to the Inner Circle Trader, but that I did get on the channel that resonated with me. I took that bits of pieces away for my own trading. And like, just to name a few overarching things, like timing a trade, entry, right? I had no idea about that you need to time a trade, because No Nonsense Forex teaches you at the end of the day, on the close of the bar, if your algorithm aligns and you get a signal, that's your timing and you enter. But on the Inner Circle Trader, there's way more precision things going on with the scalping or whatever, and I've learned to time my trade perfectly and waiting for price to come to me. And also another overarching thing that stuck out for me is paying the trader. It's not about getting an entry and getting those massive runs only. It's about making sure when you are right and when a trade goes in your direction, pay yourself along the way, because why else would you put in all that work to get into a trade just at the end of the day to break even? Doesn't make sense to me. So one important thing that I've learned from Michael Huddleston is pay the trader. Okay, and also time and price element of trading, that I quickly learned that time comes first and then price follows. That's something that a lot of people don't realize that is really important, is that it's time first and then the price, right? So whatever you're looking for in price in regards to your setup, you first need to wait for time to align. There's no other way, because if your setup forms in the time which is not appropriate, then those are the trades that eats into your bottom line. So you need to trade when the market is volatile, right? So that's an important thing that grabbed my attention pretty early on. And also obviously market manipulation, I heard about it on the No Nonsense Forex YouTube channel, but I got a little bit more insight from Michael Huddleston, and believe me, it's not that apparent on his videos, although he talks about it a lot in his videos. It is there, but it like he says, you need to take what he's teaching you and you need to go into the charts and you'll discover it for yourself. So that's important. And also support and resistance levels. Now don't get me wrong, I'm not talking about the normal support and resistance like everyone is talking about, right? I'm talking about true support and resistance. Now this came later on in my journey, knowing what true support and resistance is, because it's pretty, it eludes you if you do not know how the markets are manipulated. Now after discovering how it's done, this became really clear to me. So support and resistance the true way, and price levels. I use price levels just for extra confidence, because, and this is where the two of these two people that I learned is that these are the thing, this is the thing that kinda is opposite. As on the one hand, VP says that price levels doesn't work, and what I got indirectly from Michael's channel is that the banks use these levels to book their trades. Now it's not just as clean cut as that, coming to these price levels and then they put in the order. Obviously it needs to be in the right time and in the right context of price. Then price levels become magic. So shout out to Michael Huddleston for that. Now, out of all of these things that I've learned from these two channels, I'm not emulating these people, and that I want you to understand perfectly, is that I'm not emulating these people, right? What I'm doing is I listen to what they're saying and I take everything they're saying, I go test it for myself, and I take the bits and pieces that I see I can use in my own special unique setup, and I formulate my rules around these things. So my strategy is GFX 7 hybrid strategy. Now I've learned to, and the things I'm going to mention now is not the detailed fine print rules about my strategy, that will come later. But for now, let me just give you an idea of the overarching things that I do use. That I quickly learned that you need to anchor yourself in a bias, right? Am I leaning more towards the upside? Am I leaning more towards the downside? You need to have a bias, and obviously things isn't just as easy as that. And the reason why I say subjective bias is that I'm placing, or I'm basing my bias on an indicator. Now I know some of you from the ICT camp would say, right, whoa, this dude talking about indicators, this guy isn't trading the way that guy's trading. And as I said, I do not emulate these people. I take what I can. If it makes sense to me, I'll use it. Right? So I base my bias on an indicator, and that's the reason why I say subjective, is because an indicator is only a measurement of what already happened in price, and you can't base your entries based on that. Now again, not a cheap shot at No Nonsense Forex, because predominantly they base their entries on indicators. Now I disagree slightly about that, and you'll find soon enough what I mean with this as we progress on this channel. But just a quick note is that I have a subjective bias, which I took from my No Nonsense Forex algorithm on No Nonsense Forex, which was my first confirmation indicator. And then I have this bias and I anchor myself in that direction. But obviously, like I said, I need an objective entry criteria. I need good reasons to trade in that direction. So therefore, I use the true price action reactions in the right time context. Now obviously you can see who I learned this from. Now taking into account time of day, time of week, time of month, session times. So what I do is I lay these things out and I use the open, high, low and close to see how they react on different time scales. Now I do have something called time scale range navigation, and I will get into that. It's a bit complicated to explain in a few words right now, but that is something I use with my objective entry criteria. Price level confluence, like I said, big figures, 20 levels, mid figures, 80 levels. I've came to love these things, but again, we'll get into it. Fibonacci confluence, I just like the feel of it, although I know I'm not basing my entry on a Fibonacci. It just makes it easier to see, like Michael is saying. So 61.8 retracement level, 70.5 retracement level, and 79% retracement level. And also, I use liquidity rates. These are my foundations. Stops, buy stops, sell stops, those type of things. Because, like I said, I figured out how the banks book and how it's manipulated. So therefore, this is a really, really important part in my trading, liquidity range. Because I'm going to leave a hint. No one, I repeat, no one can enter the market without counterparty. And I'm going to leave you with that for now to think about it. Anyway, the next one is structure shift, because I don't want to copy people's lingo about what you call this or what you call that, whatever. I don't want to get into that type of thing, right? So for now, I'll just call it structure shifts. And I don't want to rename anything or give something a name. So I'll refer to whatever I'm going to show you in later videos. I'm just going to refer to them as structure shifts. Now, entry criteria needs to align with subjective bias. Really, really important. But as you guys know, or I assume most of you know, that even if you have whatever great edge, it means nothing without, money management. So risk percentage per trade, that's something I'm going to be talking about in the weeks to come. Really important, as people say there's an industry standard of 2%, and I do agree with it, but I do not agree with putting on that much percentage per trade, and we'll get into it. Stop loss placement relative to your entry criteria, and now my entry criteria is very specific. I'm not claiming that I'm right all the time. I'm just saying my triggers is normally right, and when they occur, that's the only time that I can work out where my stop loss is going. But I have around a fixed range of pippage that I use for stop loss, mostly around 30 to 35 pips for stop loss. Now notice that's not a fixed stop loss pippage. Just want to get that clear. But anyway, something I learned from No Nonsense Forex also that I've incorporated and used is scaling out, profit targeting. And the reason why is, like I said earlier, something important that I learned from ICT is that pay the trader. So where I take money off the table is very, very, very important. So scaling out is one of the most important things. Now there are two ways of doing it. You have on the one side No Nonsense Forex, whereby you take your amount risk and you split it into two. You enter on the exact same price that your entry is, same stop, and then you have different profit targeting, whereby No Nonsense Forex you have 1 times ATR profit target, and then after hitting that you break even, blah blah blah, the rest of it happens. But that's one way, splitting it into two trades. But on the other hand, you can just take off a percentage of your position you initially put on. So it's no need to press the button 2 times. You can only press it once, and you have your percentage on risk for your position. And once it reaches a certain level, you can take a percentage of that position off and leave a percentage running. Essentially, it's no different to me. It's the same thing. Splitting it into 2 is just more work. Although it's just a split second, I'm just saying, but we'll talk about it. Percentage based runners, profit targeting. Now I use this, and this is important to me, is to negate losses. Now NFX has a certain way of negating losses. Those small first target taking off money at a certain point negates the losses you might take, and those massive runners is your bottom line. Now, I disagree with that. Although that may be true for No Nonsense Forex, I cannot make that work because there's a way better way of negating losses, right? So, I'm paying myself early, right? And those running trades, those are the ones that cleans out the losses that I may incur. Because everyone takes losses. It's part of trading. It's cost of business. But again, we'll get into it. Now, with money management comes trade position management. When you're in profit, what are you going to do? How are you going to manage that trade? When you're in drawdown, how are you going to manage that trade? And these are some of the questions that you might be wanting to ask yourself. When to adjust stop loss to break even. Now, you guys got a formula from No Nonsense Forex when to do that. Some of you guys that are ICT traders, you know when to do that, right? I have my own way and what works best for me when is the time to adjust my stop loss to break even, right? Because that's a really important thing, because if you break even, you no longer can lose money. That's the one thing that all of them have in common, right? But still, you need to, this is the thing that actually makes you consistent. But anyway, when to activate a trailing stop loss. So after taking money off the table, you break even, when do I start trailing this thing? Or should I just leave it at break even and let it run forever? No, you can't do that. You're going to need a plan to do that as well. That's part of your money management plan and your trade management plan. Stop loss trailing, like I said, it's the same thing. How much are you going to trail that? The price, right? So if the price is a certain distance away from your stop loss, you need to keep that a fixed amount. And you need, I have a specific thing that I use for that. That's the price levels. that I do use in between where price is right now, if I'm in profit, and where's my stop loss, because I need a certain protection there in place. When and where to take off partials, when to take some money off the table, because you need to do that. You need to take money off the table. You need to make it worth it. But the question is also how much, and that's something we're going to cover as well. And by how much, I'm not talking about dollar amounts, I'm talking about percentages, what works best. Okay, where to place your runner take profit. So like I said, I do put on runners. I let every single trade run. If I get the opportunity, if the market allows the price to run, I'm going to let it run. But up until what point, that can't be subjective. So I use something from the No Nonsense Forex to see where it might potentially reach. If it gets there, it gets there. If it doesn't, at least I had something concrete in mind where it's supposed to reach. So really important. But like I said, all of these things that I'm mentioning to you in this video is still broad, vague things. And I'll be diving deep into detail in regards to all of these things in the coming weeks. So remember, your edge is nothing without a sound money and trade management plan. So it's the Trinity. You got to have the Trinity. Alright? So what you need to do is go ahead, subscribe. GFX, Geraldo FX Hybrid Strategy, and I'll take you on the journey. Cheers.